I think that the most important aspects of it have to do with the intended stimulus of the Chinese economy. There has been concern that the growth is, although it's in a reasonable place and a stable place, it's not as high as people would like it to be, and this has been caused. This is a result of the COVID uncertainty, as well as some other things that are going on in the world economy, tensions, trade wars, and so forth. So I think that there is an interest within China, but really in other countries as well, to make sure that their economies to continue to grow and perhaps grow at a higher rate than they have been. Now, just again, put things in perspective. China currently is doing very well, comparatively in the world economy. What I would imagine will happen on the monetary side is that the government will allow the banks, the major banks in the country, to lend at a higher rate. That is, they will be able to take on, to issue more loans than they have been in the recent past. On the fiscal side, I think that what we will be looking at is some kind of targeted spending, targeted investment, perhaps something that we haven't seen in recent years. There has been some fairly moderate fiscal stimulus, but I think that this stimulus is intended to, in particular, to focus on domestic demand, domestic consumption. And so I don't expect that it will be so much, let's say, an investment in infrastructure, which the government has pursued in the past. There may be some aspect of that, but I think that what will be happening is that the government will be issuing bonds, be raising funds. It will be raising the permissible level of debt for the central government. It will be spending money, and also perhaps permitting local governments to spend more money in ways that will stimulate those parts of the economy that are both have been responsible for the greatest growth in recent years, and also are the ones most likely to produce jobs, especially for young people coming out of the universities these days. My reading of the China's central government is that it's actually very cautious with regard to using the fiscal stimulus. And from an American perspective, that's actually a very good thing, because we tend to, in the United States, when our government uses fiscal policy to stimulate the economy, it's often done in a very political way, and the money is not necessarily targeted to those sectors, either of the population, of consumers or businesses or whatever, that would help the economy most, but rather it's given to those sectors, those constituencies that have the more relevant and more powerful political clout. So, for example, in the case of the COVID period, when there was a lockdown and tremendous cooling of the U.S. economy, the government spent money. It issued checks to large numbers of businesses, large numbers of individuals, basically just to put money in the hands of people and companies to get them spending more. And that's, roughly speaking, that's a good idea. That's the right thing to do. But if you do it without too much care, you can end up stimulating inflation, which I think, and I believe that the inflation that we've seen in the U.S. over the past couple of years is to a large extent attributable to that kind of unchecked spending. You can monitor this over time. It's not as though you have to do it once and then just cross your fingers and hope for the best. No, you can monitor it, especially in China's setting, where the government can take things slowly, deliberately, and in a more targeted manner. They can experiment. They can give certain subsidies or tax breaks to certain sectors. If it turns out that things don't work exactly the way they wanted them to, perhaps they can make some modifications down the road. But basically, what you want to do is to encourage people and small companies to purchase more computers, more technology, more software. You don't want them just to buy for the sake of buying. You want them to buy improved products. You want them to buy in some way that is going to have a multiplier effect through the economy that will have further ramifications. So you probably will want to make sure that the subsidies, the stimulus is going to those people who are less affluent, who are maybe more concerned because of the rate of growth hasn't been as high as expected, and by giving them a boost, a subsidy, a tax break, you will encourage them to spend more money. So in other words, you can use the funds to overcome some of the excessive caution that is keeping people from spending in the current environment and slowing the economy as a result. I'm not aware of any structural problems in the real estate market. I think that the main issue there with real estate and China is that real estate anywhere in the world is sensitive to uncertainties. It can be from time to time it can be a fairly volatile sector. There can be bubbles, there can be bursting bubbles, collapses, and so forth. So that's just the nature of real estate. So the issue in China is more that, not that there's anything particularly wrong with the real estate market, it's the degree to which the economy relies on real estate. The degree, in particular, two aspects. One is, for ordinary individuals, it's a major source, a major asset class. It's one of the few things that they invest in for the long term, and they see it as a way of putting aside the money that they've earned through their hard work, and they want to make sure that it's there down the road, when their children grow up or when they reach old age and they need medical support and so forth. So it's an asset class, and it's a disproportionately large asset class in China compared to other countries. So because of that central role that it plays, whenever there's volatility, uncertainty in that market, it's problematic. Now, there's another aspect of real estate, which is that it's one of the large sources of income especially for local governments. They have land, and they can bring that land into the private market and raise funds by doing that. So that's another reason that real estate is very important in the Chinese economy. But I think that perhaps some of the recent efforts the central government has made to reduce the debt of local governments and to make the debt that they do have more transparent and more clearly funded going forward, perhaps can relieve some of that dependence on real estate as a source of revenue. But that's something that we'll have to watch closely as the year progresses. There has not been enough of a change in terms of international trade to disrupt the Chinese economy. However, I don't think that that's necessarily true around the world. I think that in the post-COVID, post-trade war period, there has been much rethinking of trade relationships, and many countries are trying to diversify their supply chains They're trying to add trading partners and not sort of put all of their eggs in one basket. That has diminished opportunities to some extent for China to sell its products overseas. I think it's also diminished the amount of FDI, or foreign direct investment, in China, although the country remains one of the very top locations for foreign direct investment to be placed. So I think that the good news is that things have been fairly stable, but the amount of FDI has not been what one would desire it to be. It's been lower. I anticipate that will increase in 2025. The economy is growing every year, but the rate at which it's growing is decreasing. And that's because China's economy is transforming. It's changing over time. It's changing from an economy that's more focused on low-end manufacturing to now high-end manufacturing, high technology, and a variety of other goods and services that are being produced. So one would expect GDP growth to be positive, but to be decreasing over time. I think it's rather remarkable, actually, given all of the turbulence from the COVID period, that the rate of growth is still as stable as it is in the high 4, low 5% annual range. I know the government is looking at approximately 5% as its annual target these days, and I don't see any reason to expect it to be anything different from that in the coming year.